What's up guys, Mickle here, and it looks like the SEC might be running into some pretty big trouble with their current cryptocurrency cases. In this video, I want to show you why the SEC might have made some very bad calculations, and they might be failing pretty miserably in their pursuit to attack the cryptocurrency industry. We just had a brand new cryptocurrency case wrap up that's kind of going under the radar, and it's going to show you that the SEC is really fighting from a point of weakness right now. I've been saying for the last couple weeks that the SEC might be in pretty big trouble when it comes to the Ripple case, especially because it seems like as of now, the whole idea that XRP could possibly be a security might already be completely off the table. In this video, I want to break down why the SEC is in such a weak place and how devastating it could potentially get for them over the next couple months. I also want to show you a brand new clip of John Deaton talking about when he expects the Ripple SEC case to end. We have seen a lot of lawyers coming out recently and talking about why we haven't seen a decision yet, when we can expect to get one. I'm going to let John Deaton take this video out, let you guys know what he thinks when we can be expecting a decision, because I think for most people we're kind of like, where is this thing? Let's see what John Deaton has to say. And at the very end, I want to talk about a pretty critical moment coming around in all markets. It looks like we were at a pretty decisive point, whether or not we're going to fall back and make new lows or continue higher. Make sure to stick around to the end video to see that. You are not going to want to miss it. Like always, make sure to leave this video a like and subscribe to the channel. It's going to help me out so much. Also, if you ever need a good place to buy some XRP or the Flare token, make sure to check out my favorite exchange, Uphold, down in the description of this video. With that said though, let's jump right into it, and I hope you guys enjoy the content. So I want to start out this video and quickly talk about a case we actually just got a resolution in, and this one definitely went a little under the radar. When it was first dropped, everyone was kind of freaking out. It kind of disappeared and now it just came back. This is actually being reported on by Metal Man, and I want to break down his analysis because I thought it was very interesting and pretty unique. I actually had a completely different opinion when I first saw that this case got resolved. I actually thought it was bad news for the cryptocurrency industry, but he completely flipped my opinion. So I want to break down exactly what he had to say here and break down why the SEC is really in a point of weakness right now. He said, here's my take on this settlement in principle that was announced between the SEC and the Wahi brothers earlier this week. The SEC blinked, and here's why. And just so you know, what was going on here is the SEC was suing some former Coinbase employees for insider trading. Yes, these Coinbase employees should not have been insider trading, but the SEC tried to tack onto this case the fact that these former employees were trading unregistered securities. So really, the SEC probably didn't care much about the fact that they were insider trading. The SEC just wanted to make the claim that they were trading unregistered securities, calling the crypto token securities, but rather than going after Coinbase for listing these securities, they wanted to attack these random employees because these random employees probably wouldn't be able to defend themselves, and it would be an easy win for the SEC. That's called backdoor regulation. It's disgusting, but it's the SEC's preferred tactic. Well, Metal Man said the SEC probably thought the Wahis would just roll over since the brothers already pled guilty to criminal charges involving their insider trading. That's the SEC's favorite kind of case, a quick win with no opposition. The Wahis, however, surprised the SEC and chose to fight with a top-tier legal team. The legal team's arguments explained why the 9 tokens in the case were not securities and laid out their arguments brilliantly. In addition to that, there was also excellent amicus briefs by Coinbase, the Blockchain Association, and the Digital Chamber of Commerce. The SEC realized that they just might actually lose the case. Assuming the SEC intends to follow through with its threat to sue Coinbase, that will be the case for all the marbles. So the SEC might have given up in the Wahi case to make sure that they left as much on the table as possible for a potential case against Coinbase in the future. The SEC might get some level of cooperation from the Wahi brothers as part of their settlement, which they can use against Coinbase. But this shouldn't make much of a difference because the Coinbase case, like Ripple, will turn into a legal question, not a lot of disputed facts. Finally, it's theoretically possible that the SEC might come to its senses and realize, as John Deaton has been saying for years, even if the tokens were originally offered as investment contracts, they no longer qualify as securities when traded in the secondary market. So I know that was probably pretty complex, but let's break it down nice and simple what just happened. So it looks like the SEC had a pretty easy case on their hands where they were going against former Coinbase employees. The SEC thought it was going to be a slam dunk case. These people would never be able to properly defend themselves. The SEC was going to be able to sue them, allege that the tokens they were using on Coinbase were securities, get backdoor regulation proving that these employees were trading illegal securities, and in the process call the token securities in a very easy case against some low-level people with bad attorneys. Well, these guys completely flipped this case against the SEC, got a really good legal team, and the cryptocurrency industry came to their back and made sure that there were strong amicus briefs in their support. Because of this, the SEC was caught completely off guard, and suddenly they were in a position where if they fought this case out, it could end up in the same place the Ripple SEC case is going, where there's a very weak argument that the tokens themselves were securities. Because of this, the SEC essentially backed out. They said, wait, no, let's just settle, let's get this over with, and let's completely drop this issue. If the SEC actually wanted to prove that these tokens were securities, they wouldn't have settled. They would have forced these people to fight the case. But the SEC might be realizing that their position is not that strong. And I want to point out something pretty interesting because I have actually been talking to a former SEC official on Twitter about this exact issue. How could the tokens themselves be securities? It doesn't seem like it makes sense. And what I have gotten from this SEC former attorney, and it's not Scott Chamberlain, he's actually a lawyer in the XRP community, so don't get that confused. But what I am getting from this former SEC attorney is there is no way that the SEC can possibly say that the tokens themselves are securities. He is actually personally in denial that the SEC is even trying to allege this. Well, people like Scott Chamberlain and John Deaton have read through the entire Ripple SEC case. They know that the SEC is trying to say the tokens themselves are securities, but the SEC officials who used to work there think that this argument is so nonsensical they won't even admit that's what's going on. The SEC has completely lost their way in the Ripple SEC case, was hoping they would get a judge that would just rubber stamp anything they said, and it turns out that the legal issues at hand don't really make sense. The SEC's case is so convoluted because they tried to make a valid claim at first. They tried to say, hey, sometimes that Ripple sold XRP, some of those times they offered the XRP, that might have been an investment contract. Okay, no one is disagreeing with that. Maybe a couple times in Ripple's history, they offered XRP as an investment contract. But the token itself isn't a security, and the SEC tried to allege that, hoping they would get lucky and the court would just rubber stamp that argument. But it's completely falling apart on them. No one is believing the coin itself is a security. It doesn't make any sense. And this is the biggest issue for the SEC going forward. They are bringing arguments to court that don't make any sense. What we are seeing is the SEC being forced to capitulate. They are being forced to give up on this argument that the token itself is a security, and that is exactly what just happened in this Wahi case. What I expect to happen is for exactly what John Deaton has been saying since day one. The token itself will not be a security, and that is going to be made official in the Ripple SEC case if the SEC doesn't figure out a way to settle it with Ripple. Either way though, this is fascinating because the SEC is clearly fighting off its back foot right now. No one who used to work at the SEC even agrees with the arguments they're making. The SEC has completely lost its way and now making legal arguments that don't make sense. And to top things off, it also looks like the SEC is going to lose against Grayscale because I listened into that first call and the judge couldn't even wrap his head around what the SEC was trying to argue. To him, it made absolutely no sense why the SEC would allow a Bitcoin futures ETF and not a spot ETF. And this is just a very positive direction because the SEC is very good at controlling the narrative when they can just go out and say everything's a security, come in and register. But what they are failing to do is actually prove their claims in court, and this is the most important thing. Once the SEC gets a couple losses under their belt, it is going to open the floodgates and give different cryptocurrency projects the confidence to stand up against the SEC. Now, this is exactly what we need because this is going to start providing clear guidance for the cryptocurrency industry and prevent the SEC from stifling innovation. Ultimately, these court cases could not be going better for these cryptocurrency companies, and really the only bad one we saw as of recent was the library case, and even in that case, the judge forced the SEC to admit that the token itself on the secondary market is not a security. It looks like things are really falling into place, and it looks like all the clear rules that Gary Gensler has been talking about the last couple months are completely falling apart in front of him. So now I want to move on and quickly talk about when we could get a decision in the Ripple SEC case. Now it seems like almost every single date we have been given has completely fallen apart, so I'm just gonna let John Deaton tell you what he thinks. I showed you what Jeremy Hogan thought the other day. I think John Deaton seems pretty confident in his time frame. Now I know it's annoying that these time frames keep getting pushed out, but what you'll notice is now the time frames are only being pushed out by a couple weeks, a month max. It really looks like we're starting to narrow in when we're going to get this decision. No one can predict the future. We're all waiting on Judge Torres. It's important to note that the time frames really are right around the corner now, if not literally tomorrow. So listen up to what John Deaton has to say, and like I said, I'm just annoyed as everyone else that we haven't got the decision yet, but at least everyone's predictions are now very close in the near future. Listen up to John Deaton.
What I've been telling people is that somewhere between March 6th and May 6th, we'll get the ruling. It could be today or it could be May 6th. All we can do is say, if you look at her previous cases, this is the general timeline for the summary judgment decision. If May 1st comes and she hasn't decided, I'll be surprised.
So there you heard it from John Deaton. He thinks May 6th would kind of be the date where if we don't have anything, he would be surprised. We know James K. Feinle and Jeremy Hogan thought we would already have the decision, so I really do think it's any week now. Let's cross our fingers and hope nothing weird happens. Now I want to finish this video off and just talk about an interesting group of charts that were just brought to my attention. Now, what we see right now is we are at a very critical place in multiple different markets. We can see that Bitcoin is hitting some pretty decent resistance right here. We can see the NASDAQ is up against some big resistance, but most importantly, we can see that the dollar is hitting a major support zone. We want to see the dollar absolutely knife fall through this. We want to see the dollar tank. Not as an American citizen, I don't want to see that, but it would be absolutely mega bullish for all markets. And what could cause that to happen? What could cause us to finally get some real momentum and break us out of these massive dips we have been in? I mean, if you can take a look at these charts and just envision a couple candles coming up above these zones, you can likely envision a pretty big reversal off these lows we saw a couple months ago, so it would be really nice to break through these resistances. And what could be the event that could propel us through these resistances and cause the dollar to fall? Well, that would be central banks all around the world giving up on their rate hikes and pausing or even start cutting. We just got a report the other day that the Bank of England might need to cut interest rates faster and earlier than previously expected, and this would be the most bullish catalyst we could possibly get. I know a lot of people have been in my DMs recently asking, why does it seem like all markets are moving in unison? Why does it seem like every single cryptocurrency moves the same exact way? Why is it every single stock moving the same exact way as Bitcoin? Well, that's what happens when you get these crazy macro environments we're in right now. Everyone just hyper focuses on things like Fed rate hikes and says, okay, we need to buy stocks, we need to buy investments, or we need to sell them. Once we get back to a more normal period, we're going to see the markets moving more on fundamentals, and I think we're getting pretty close to that time right now. We need to see the Fed finally take their grips off the market. We need to see them let the market breathe a little bit, and I think we're going to see a lot of investments start trading more on fundamentals rather than just all moving in unison. Anyway though, guys, I hope you enjoyed this update. If you did, make sure to like and subscribe. It really does mean so much, and for now, Mickle out.